Welcome back, everyone. I hope you all had some fantastic holidays.
Yeah. Happy New Year.
Happy New Year. Ready to kick off the year on Wall Street.
Let's do it.
All right, so today we're going to do a deep dive into the NYSE AmMac Desk market update.
For January 2nd, 2025.
January 2nd, 2025.
Big day. First trading day of the year.
Now, I know market updates, maybe not the most exciting thing.
Not exactly a beach read.
But trust me on this one. This is going to be good, all right? This deep dive is going to help us all really understand what is happening in the market right now.
Absolutely. It's about connecting those dots. What does it mean for you? What does it mean for me? What does it mean for everybody listening? We're going to break it all down.
So it is the first trading day of 2025.
Yeah.
Everyone is back. And I think a lot of people are trying to figure out, okay, is the party over or is it just getting started? What's the overall vibe?
Yeah, what's the sentiment? What are people feeling?
Yeah.
Well, the report uses the phrase cautious optimism.
Cautious optimism. Okay.
Cautious optimism. So basically, there was a bull market in 2024, and it's got some legs. There's some momentum there. But there's a lot of unknowns, a lot of what-ifs hanging out there.
So are the what-ifs keeping people up at night? Like, what are the big questions that have investors kind of, like, biting their nails a little bit?
I think it's a really good question. And I think the best way to think about it is imagine you're planning a road trip. Right? You've got your route planned out. You're excited.
Yeah.
But there's a chance of road closures. There's detours. There might even be a snowstorm. Who knows?
Okay, so a little uncertainty.
Yeah, and that's kind of what we're dealing with in the market right now. We've got policy uncertainty. We've got to think about how fast is the global economy actually growing?
Yep.
Is the Fed going to ease up on interest rates? And of course, you always have geopolitical tension.
Of course, yeah.
And those never go away.
They never go away.
And then let's not forget cybersecurity. Always a wild card.
Always a wild card. So it sounds like there's a lot of things to be thinking about, a lot of things that we don't know just yet.
A lot of factors in play.
But how's this cautious optimism actually playing out in the U.S. market? Like, what are we seeing?
Well, it's kind of a mixed bag, to be honest. The S&P 500 is down, and the NYSE FSIC Plus Index, which...
Okay, remind me what that is again?
That tracks all those big tech companies, the big names.
Oh, yeah.
That's down too. But, and here's where it gets interesting, the mid-cap and the small-cap stocks, they're actually doing better than the big guys.
Really? So the smaller companies are kind of outperforming the big companies right now?
Mm-hmm.
That's interesting.
It is. It might seem counterintuitive, but one of the things that the report points to is rising U.S. Treasury yields.
Okay.
So the 10-year yield, it's kind of hovering around 4.60% right now.
Okay.
Which is a key psychological level. And when that happens, it can make some investors a little nervous about putting money into those big established companies.
So they get a little more cautious.
Exactly. A little bit more hesitant.
That makes sense. And so is that why we're seeing this volatility spike that the report mentions, where like the VIX hit 19? Can you unpack that a little bit? Because I feel like I always hear about the VIX, but what does that actually mean for the average person out there?
The VIX is kind of like, imagine you're on a roller coaster, right?
Okay.
The VIX is like measuring how high those hills are and
Yeah.
how fast you're going up and down.
So how wild the ride is.
Exactly. And right now, a VIX of 19, it's telling us that the ride's a little bit bumpier than usual. It's not panic-inducing,
Right.
but it's definitely a sign that the market's feeling a little on edge.
A little on edge, yeah.
A little bit of uncertainty.
So if we are on this roller coaster, which cars are going up and which cars are going down? I know the report mentions sector performance.
Mm-hmm.
What are we seeing there?
Right, yeah. So sector performance is all about which parts of the market are doing well, which parts are maybe lagging behind.
Yeah.
Right now, the energy sector is leading the pack. Yeah.
And a lot of that has to do with rising oil prices. Think of it as kind of a classic supply and demand situation.
Okay.
Less supply, more demand, prices go up. But on the flip side, consumer discretionary, so those are the things that you buy when you have a little extra cash.
Yeah.
Those are lagging behind.
Oh, that makes sense, yeah. People are a little
Feeling
less inclined to spend as freely.
Yeah, a little hesitant to spend as freely right now. Makes sense.
Yeah, absolutely. And speaking of spending, the report also kind of dives into some key economic data points.
Right. Yeah. Let's get into the nitty-gritty.
Let's get into those. It says that manufacturing, which it measures by this thing called PMIs, is showing some improvement, but it's still in this contraction territory. What does that even mean? What is contraction when it comes to, like, the economy?
So imagine a factory, right? And it's not running at full capacity.
Okay.
It's kind of like running below its potential.
That's what contraction means. And while it's good that we're seeing some improvement, the fact that we're still in contraction territory means that there's still some underlying weakness in the economy.
Okay, so not out of the woods yet when it comes to manufacturing. What about jobs? Because I know the report mentions jobless claims easing. So is that a good sign? Are we kind of seeing things turning around in the job market?
It could be. It could be. But we always have to be careful about reading too much into data that comes out right after the holidays.
Right.
Because, you've got seasonal factors that can really play a role there.
Like holiday hiring and all that.
Exactly, yeah. So it's a bit of a wait-and-see approach there.
Okay. And then finally, there's the housing data, which sounds a little, well, depressing, to be honest. Mortgage applications have really taken a nosedive and interest rates are continuing to climb. So what's the outlook for anyone out there who's thinking about buying a home in 2025?
Yeah, I wouldn't say it's a buyer's market right now.
Right.
Those rising interest rates, they mean higher mortgage costs, which basically means housing is less affordable.
Less affordable, yeah.
And the report specifically calls out this continued pressure on housing affordability. Not exactly a phrase that makes us super excited.
Not super optimistic.
No, not really.
Not a great start to the year for housing.
Yeah.
Okay, so we've talked about the U.S. market, but this report also looks at the global picture. So let's kind of zoom out and see what's happening with our neighbors around the world.
Let's take a trip around the world.
Let's do it. What are we seeing?
Well, starting in Asia, markets closed lower.
Okay.
And a lot of that is because of some weaker than expected manufacturing data that came out of China. It seems like the world's second largest economy is still dealing with some challenges, some headwinds.
So China's slowdown is really impacting the entire region.
It is. It's having a ripple effect, yeah. But here's where things get a little interesting.
Okay.
European markets actually finished higher, even though their manufacturing numbers are also down.
Oh, wow. Okay.
So it just goes to show you that global markets, they don't always move in lockstep. They've got their own things going on.
So Europe is kind of doing its own thing right now.
Exactly.
What about Latin America?
Yeah. So Latin America, it's facing a whole bunch of different unique challenges. You've got mixed performance in manufacturing. You've got currency fluctuations.
Okay.
And even concerns about competition from, you guessed it, China.
Oh, wow.
So it's a complicated picture down there.
It is. It's like a global puzzle, isn't it? Trying to figure out how all these pieces fit together. But I guess the question is, how does this all actually affect the U.S. market? Does it matter what's happening in, say, Europe when we're focused on Wall Street?
Oh, it absolutely matters. Think of the global economy as one giant spider web, right? When one part of that web vibrates, the whole thing feels it. Right. So these global economic trends, these geopolitical events, they all create these ripple effects that eventually reach us here. And they influence how investors feel, how confident they are. And ultimately, that drives the U.S. market.
It's all connected.
It's all connected.
Okay, I'm starting to see the bigger picture here.
Yeah.
So what other pieces of the puzzle are we looking at today? The report kind of throws in some details about commodities, currencies, even crypto. Like, where do we even begin with all that?
Well, let's start with the U.S. dollar index, which is basically a measure of how the U.S. dollar stacks up against other major currencies.
Okay.
And guess what? It's surging. We're talking a 52-week high. It's exceeding 109.
So a strong dollar, that sounds like a good thing. Right?
Well, it depends. Remember that interconnected web we were talking about?
Yeah.
A strong dollar can be a double-edged sword. On one hand, it makes imported goods cheaper for us. So, electronics, clothes, that fancy coffee you like.
Oh, I like my fancy coffee.
It could be cheaper. But on the other hand, it makes it tougher for U.S. companies to sell their stuff overseas because their goods become more expensive for those foreign buyers.
So it's good for the consumer, potentially, but not so good for businesses.
It's all a trade-off.
Yeah, absolutely. Now, what about commodities? Because the report mentions oil prices going up and then kind of pulling back.
Right.
What's the story there?
Yeah, it seems like the initial excitement about oil prices rising kind of fizzled out after some new inventory data came in. Basically, there's more supply than people are anticipating, so that kind of took some pressure off those prices.
So good news for drivers out there.
Yeah, filling up your tank might be a little bit easier on the wallet.
But what about other commodities? Because the report also mentions gold and silver doing well. Why is that?
Gold and silver are often seen as safe haven assets.
Oh, okay.
So when things get a little shaky in the market, investors often flock to them looking for stability.
Makes sense.
And the fact that they're performing well right now suggests that there's still a bit of that cautious optimism we talked about.
So some people are looking for that sense of security.
Yeah.
Okay, and then how about crypto? I see Bitcoin is up over 3%. Is this a sign that crypto is back in the game?
Crypto is always an interesting one. It's definitely shown some resilience lately, but the regulatory landscape is still very much in flux, which makes it a bit of a wild card.
Yeah, still kind of figuring out the rules of the game there.
Exactly. It's an evolving space.
Okay, so before we wrap up this whirlwind tour of the market, let's look at some specific companies. The report highlights Tesla. Their Q4 deliveries and production missed expectations. So what happened there?
Yeah, it looks like that Cybertruck launch might have hit a few snags.
Yeah.
Ramping up production for a new vehicle is never easy, and even a company like Tesla isn't immune to those challenges.
Right. Even the big guys have hiccups sometimes.
It happens to the best of them.
So a little of a reality check for Tesla. But they're not the only tech giant facing some headwinds.
Right.
Apple's also mentioned in the report. What's going on there?
There's some chatter about iPhone demand being a little softer than expected.
Oh.
Which, for Apple, that's not great news. Could be a sign that people are holding back on those big purchases, maybe because they're worried about the economy, or maybe they're just waiting for the next shiny new gadget to come out.
So is this like an Apple-specific problem, or is it more of a reflection of the broader tech sector?
It's probably a little bit of both. The report mentions concerns about the overall tech sector outlook, especially with the global economy kind of slowing down.
Okay, so we've covered a lot of ground here. Overall market sentiment, specific sectors, international trends, company news. I feel like my head is spinning a little bit. It's a lot to take in.
It is a lot. And it's just the first trading day of the year. Buckle up.
Buckle up, yeah. But before we go, what are some key takeaways that our listeners should keep in mind as they kind of navigate this complex market in 2025?
I think the biggest takeaway is that we're in a period of uncertainty. We've got mixed signals from the economy, global trends are impacting our market, and there's always those geopolitical risks lurking in the background.
Yeah.
So investors really need to be prepared for volatility and be adaptable, ready to shift and adjust as things change.
That sounds like pretty solid advice. And for anyone who wants to kind of dig even deeper into all of this, I know the report mentioned something called the Inside the ICE House series, so we'll be sure to link to that in the show notes.
Yeah, it's a really great resource.
But before we completely move on from this, I do have one final question for you. And I think it's one that a lot of our listeners might be wondering about too. The report kind of hints that the Federal Reserve might cut interest rates later this year.
Oh, interesting.
But at the same time, other central banks around the world are doing their own thing. So what opportunities and challenges does this create for investors like, you and me and everyone listening out there?
That is a great question. And it's one that probably deserves a deep dive all its own. But to give you a little sneak peek.
All right. Now you've got me hooked.
All right. Well, let's pause here and pick up this conversation in part 2 of our deep dive.
Sounds good. Don't go anywhere, everyone. We'll be right back.
The Fed cutting interest rates while other central banks are kind of doing their own thing. It's like a global game of financial chess. Every move creates opportunities, but also, potential risks.
So if the Fed does cut rates, what does that actually mean for everyday investors, people like me? Should I be excited? Should I be worried? What's the deal?
Well, it could make borrowing cheaper, so that might give the U.S. economy a little bit of a boost.
Oh,
but a rate cut can also weaken the U.S. dollar.
Right, and we were just talking about how it's at a 52-week high.
Yeah, exactly. It's already pretty strong. So a weaker dollar, that could make those imported goods you love even cheaper.
That's always good.
Right? But it could also lead to higher inflation.
Oh, so it's a trade-off again.
It's always a balancing act. And then you've got other central banks doing their own thing. The European Central Bank, they're aiming for 2% inflation in 2025.
Okay.
Which might mean more rate cuts for them. And some economists are even predicting multiple rate cuts from the Bank of England.
Wow.
But then you've got the Bank of Korea kind of playing it cool, waiting to see how things shake out before they make any big moves.
So everyone's kind of doing their own thing, but also trying to watch what everyone else is doing. It's very interesting.
It's a global dance, isn't it?
It really is, yeah.
Yeah.
So for someone who's not a financial expert, what should I be watching for in 2025? What are the things that you think are going to be the most important?
Stay informed. And buckle up, because it could be a bumpy ride. Keep an eye on the economic data that comes out,
Right.
Things like inflation, jobs, all that stuff. Pay attention to what the central banks are saying, what moves they're making. And, those geopolitical hotspots, those can always throw a wrench in things.
Oh, something.
Yeah.
So knowledge is power. Okay, I like that.
Oh.
But let's go back to the NYSE MacDesk market update for a second.
Okay, back to the report.
Because it mentions some stuff about market breadth and tactical indicators. Two terms that I think make a lot of people's eyes glaze over.
Yeah, they can be a little intimidating.
So can you just demystify those a little bit for us? What do they actually mean?
Absolutely. Think of market breadth as a popularity contest for stocks.
Okay, I like that.
So it tells us how many stocks are rising versus falling. Early in the day, we had really strong breadth. More stocks were going up.
Yeah.
But as the day went on, things kind of shifted.
Oh?
More stocks started dipping down. So it's kind of like a gauge of the overall market enthusiasm,
Yeah, so how excited or not excited people are.
Exactly.
Okay, and what about technical indicators? What are those all about?
Technical indicators, those are a little bit more like reading tea leaves.
Okay.
They use past data to try to predict what prices are going to do in the future.
Okay.
The update mentions oversold conditions.
Okay.
What that basically means is some stocks have dropped so much that some investors are starting to see them as bargains.
Oh, okay. So even in a down market, there might be some hidden gems out there.
Potentially. But it's always important to be cautious, especially with all the uncertainty we've been talking about.
Right, right.
Remember, investing is all about balancing risk and reward.
Yeah.
And it's crucial to have a strategy that matches your goals and your comfort level.
Yeah, yeah.
How much risk are you willing to take?
Absolutely. Okay, so I don't want to get too lost in the technical stuff, but the report also mentioned some numbers, things like bond yields and commodity prices.
Yeah.
Can you break those down for us in a way that, people who don't have a finance degree can understand?
Totally. Bond yields are basically the return you can expect to get from holding a bond. So when yields go up, it means bond prices are going down.
Okay.
The update points out that the 10-year Treasury yield, which is a big deal, it had a bit of a roller coaster day itself.
Oh.
Went up, then cooled off a bit. So that tells us there's some volatility in the bond market.
Okay.
And that can impact things like interest rates and how much it costs for businesses and everyday folks like us to borrow money.
So even if I'm not directly invested in bonds, I should still pay attention to what's happening there.
Yeah, because it all ties together, remember?
Right, right. The spider web.
Exactly, the spider web. Now, let's talk commodities. We already touched on oil, which had that initial jump, but then calmed down because of that surprise supply.
Right, like a party where suddenly more snacks show up.
Exactly. More guests, more snacks. Now, on the other hand, you've got precious metals like gold and silver having their moment.
Yeah.
The update says it's because of their safe haven appeal, which makes sense.
Yeah, people are nervous. They want something stable.
Exactly.
Makes sense to me. Okay, and the update also calls out some specific companies. Tesla's Q4 deliveries and production, they missed expectations. And Apple's dealing with that potential weaker iPhone demand. So what's the takeaway here?
I think it just goes to show that even these giant companies aren't immune to the forces that are shaping the market.
Yeah.
And that slowing global economy, that's a big factor right now. It's casting a shadow, especially on the tech sector.
So even the titans can stumble.
They can. It happens.
Well, I got to say, this NYSE MacDesk market update, it's a lot to take in. There's so much information about the financial world. It's easy to get overwhelmed.
It's true. The market is a complex beast. It's constantly evolving, changing.
Yeah.
But that's also what makes it so fascinating. There's always something new to learn, something new to understand.
And that's why we do these deep dives, right?
Absolutely. To break it all down, make it accessible, make it understandable.
So that people can make informed decisions.
Exactly.
Okay, so before we move on to our final segment, I want to circle back to that U.S. dollar index, the one that's at a 52-week high.
Oh, yeah, the strong dollar.
Why does that matter? Not just for Wall Street people, but for the average person.
Well, think about it this way. Imagine you're planning a trip to Europe, right? A strong dollar means your travel budget is going to go further because you get more euros for your dollars.
Oh, that's nice.
But if you're a business owner and you're trying to sell your products overseas, a strong dollar makes your goods more expensive, which could hurt your sales.
Right, so it's good for travelers, but maybe not so good for businesses.
Exactly. It's all about perspective.
Yeah.
And understanding how these big financial forces can actually impact our everyday lives.
Okay, I like that. One last thing before we move on. We talked about the Fed potentially cutting interest rates later this year, but what will actually make them decide to do that? Like, what should investors be paying attention to?
Well, the Fed, they're trying to walk a fine line. They want to support the economy, but they also don't want inflation to get out of control.
Right, right.
So they're going to be looking at data on inflation, on economic growth, on jobs. It's like a doctor checking your vital signs.
So by keeping an eye on those things, we can kind of get a sense of what the Fed might do.
Exactly. And that brings us to our final segment where we're going to zoom out and look at some of the big themes and trends that we think are going to be important in 2025.
The grand finale. Okay, so we've covered a ton of ground in this deep dive. We talked about that cautious optimism, the mixed signals from the economy, the global forces at play. What are the big themes, the things that are going to really shape the market in 2025? What should I, as an investor, what should our listeners be thinking about?
Well, if I had to pick a few key themes, I'd say really keep an eye on this dance between inflation and interest rates. We know the Fed is thinking about cutting rates, but, that could actually make inflation worse.
Yeah, that's the balancing act, right?
It is.
Lower rates might be good for the economy overall, but it could also make prices jump up even more. So what's an investor to do? Just kind of sit on the sidelines and wait.
Not necessarily. Remember those safe haven assets we talked about?
Yeah.
Things like gold, silver.
Right.
Those can be good options when you're worried about inflation. Also, think about diversifying your portfolio. Don't just stick with stocks and bonds. Think about commodities, real estate, even things like inflation-protected securities. There are ways to try to protect your investments from, being eaten away by rising prices.
Be strategic. Be a little bit adaptable. Don't put all your eggs in one basket.
Exactly. Spread the risk. Now, another theme to keep in mind, the energy transition.
Oh, yeah.
The world is moving away from fossil fuels, moving towards renewable energy. And that's creating a lot of opportunities, but also some challenges.
Yeah, we see that with those clean energy stocks, electric vehicles becoming more popular.
Yeah, exactly.
But what does that actually mean for someone who wants to, maybe dip their toes into investing in that space?
It's about finding the companies that are really leading the way. Those innovators in renewable energy technologies, in sustainable transportation, anything that's helping to build a greener future. And it's not just about doing good, it's also about potentially good returns, because that sector is only going to grow.
So being on the right side of history and the right side of the market. I like that.
Absolutely. And one more trend that I think is worth watching, artificial intelligence.
AI. Yeah, it's everywhere.
It's transforming so many industries, healthcare, finance, transportation, entertainment. And that creates opportunities for investors.
AI, it's like a buzzword. It's everywhere. But for someone who's not, super tech savvy, how do you actually invest in AI?
There are a few different approaches. You can invest directly in companies that are developing and using AI technologies.
Okay.
Or you could look at thematic ETFs. Those focus on AI, things like robotics and automation.
So there's kind of an option for, the hands-on investor and then the more passive investor.
Yeah, exactly. But like with any investment, do your research, understand the risks. But the potential for growth in AI, that's undeniable.
It's pretty amazing. Well, this has been fantastic. I feel like I have learned so much. But before we go, any final words of wisdom for our listeners out there as they navigate the market in 2025?
Stay informed, be adaptable, and don't be afraid to take some risks. But calculated risks.
So,
the market is constantly changing.
Yeah.
But if you have the right knowledge and a little courage, you can ride those waves and hopefully come out on top.
Great advice. And of course, for anyone who wants to dive even deeper, we highly recommend checking out the Inside the ICE House series that we mentioned earlier. We'll link that in the show notes.
Great resource.
And with that, that's a wrap for this deep dive. Thank you all so much for joining us. We hope you found this episode insightful and helpful. Remember, knowledge is power, and the more you know about the market, the better equipped you'll be to make smart investment decisions. Until next time, happy investing.